If you are a veteran or an active duty service member and you're thinking about using your VA loan benefit, I want you to know that it's the most powerful tool in your sea bag. But a lot of people don't even understand how great this benefit is in saving you over thousands of dollars and maximizing your wealth through home ownership. So I'm going to be breaking all this down and more for you in this video. So stay tuned, and all the way to the end, I'm going to even give you a secret tip that a lot of people don't even think about or discuss. So let's get after it right after this. Hey, welcome to the Moving to Norfolk channel. I'm your host, Craig Houston, and if you're thinking about making a move to the Hampton Roads area, whether that's Norfolk, Virginia Beach, Suffolk, Chesapeake, Portsmouth, Hampton, Newport News, I am your real estate agent that's waiting to help you make any one of those options available to you. So feel free to ring that notification bell and subscribe to the channel so that way you can always be locked in on anything that's going on with the Hampton Roads community. And I get phone calls and text messages from viewers like you each and every day wanting to know how to use their VA benefits to the best of their ability. And I love it. So you can hit me up at 757-294-8163, and we'll leave all that down in the description for you below as well. And you can call and text me at any time. And whether you're moving in 9 days, whether you're moving in 90 days, I'm ready and equipped to help you make that smooth move using your VA loan benefits to Hampton Roads. And let's get into what's going on with your VA benefits and how you can maximize these to save you thousands of dollars. But first, let's talk about what is the VA benefits that you're receiving for your home loan process. Now, if you're eligible for a VA home loan, you're going to be eligible to put zero money down on a home. Now, why is that important? Well, let's talk about it just from a simple standpoint of you're thinking about moving to Suffolk, Virginia. Suffolk, Virginia actually has a $390,000 median sales price at the end of February 2025. So if we were to say $390,000 times 0.305, if you was to do FHA loan, because you would have to put 3.5% down, well, that would save you $13,650. Well, if you had to do the same number again for that 390 times 5% for a conventional loan to actually get into for a down payment on that loan type, you save $19,500. So to me, you're already saving somewhere between $13,000 to $19,000 just by using your VA loan benefit if you're eligible veteran or active duty service member. But secondly, there's no privatized mortgage insurance on these loans as well for a VA loan. What is that? Well, a FHA or a conventional loan, if you're using any one of these loan types, if you don't put the maximum percent of 20% down, they want to make sure that they bet against their risk of you defaulting on the loan. So you have to pay what is called private mortgage insurance. Now, depending on the loan vehicle and depends on the market ability of that loan type at the time of any time that you're actually doing the loan application, that mortgage insurance can be roughly somewhere between another $70 or $100 or even a little bit more, depends on your credit score as well. So a lot of things goes into that formula, but just realize that that's an additional expense that a service member does not have to pay up front. Now, also, we're going to talk about competitive interest rates here. Like if you're looking at competitive interest rates, matter of fact, what I'm going to do is I'm going to bring it up on the Mortgage News Daily. You can use this to actually track what is going on with interest rates daily to kind of get an idea and feel for it. But if we bring these up here, you'll see that the VA loan currently right now is sitting at 6.30. FHA is a little bit slightly better at 6.28. But if you're looking at the regular fixed rate for a conventional loan, you're looking at 6.81. If you're looking at a 15-year fixed rate, 6.25. And obviously a jumbo is at 7.01. Now, one of the other things that actually is taken into consideration as well with a VA loan, that they have flexible credit scores that they can take into for credit requirements as well, making it a little bit more easier to get into a VA loan instead of some of the strict requirements that you have to go through with FHA or conventional. So the VA actually helps you out with a lot of these things where it makes it a little bit easier to get your foot in the door for home ownership. But those are the basics. That's what you need to know right out of the gate about a VA loan. So if you have any other particular questions about it, I want you to use any one of the forms of communication that'll be down in the description and the pinned comment to reach out to us, so that way we can help you walk yourself through any one of those situations that may be particular to your situation. And I mean it. Call or text me anytime. It does not matter. I'm ready to assist you in helping you make a smooth move to Hampton Roads. Okay, so let's talk about what some of the things that lenders won't tell you. And look, I want you to keep it shh. But anyway, share this video with as many people as you possibly can who are eligible for these benefits, because they should know these things are there for them as well too. Okay, so secret number one. Secret number one is that you definitely can use your VA loan more than once. A lot of individuals who are actually eligible for this benefit always think that they got to hold on to it for dear life and only use it when they're ready to actually purchase their final forever home. That is not the case, and it would never be the case as it's currently standing in the form of the structure of the VA loan program. Matter of fact, you can purchase a home, and if you ever sell that home and it restores your full benefit back after you pay off the mortgage, you can use your loan to purchase another home once more soon after that home closes. Or there's also an opportunity where you may have eligibility left to actually purchase one home at a lower price point, let's say $205, and then you decide, hey, I want to purchase another home, but I don't want to sell this, so I can turn this into a rental income. You can do that as well by using your rest over stepped up eligibility that's left over from the VA loan. Okay, Craig, you said a lot. What does that mean? Okay, so once again, let's go back to my calculator. Let's say that you buy a home for $275,000. Currently, right now, the VA's loan eligibility right now, the cap, if you want to use it more than once, is $806,000. Okay, if you bought a $275,000 home, you will actually have $531,000 left over in eligibility to purchase your next home. Well, okay, let's say that, Craig, that the next home I want to buy though is $600,000. Great. I'm glad that's a great question that you asked. So if you have $531,000 left over and you wanted to buy a home that was $600,000, we will minus the $600,000 from $531,000. That will leave you with $69,000 that we need to figure out. Well, VA says if the buyer who's looking to purchase anything over their leftover eligibility will have to bring 25% of that to the table to close the loan, and we would give them the loan for $600,000 in this instance. Okay, so if that's the case, 25% of $69,000 is actually $17,250,000. Now, why is that something to actually know? Okay, so let's talk about how much you will owe if you just went out and bought a $600,000 house from a FHA standpoint, on 3.5%. 3.5%, you would need $210,000 to still complete that purchase. All right, guys, I had to step in real quick here. This is Future Craig editing the video while I just told you that $600,000 at 3.5% is $210,000. That is inaccurate as I don't know what. And when I get excited talking about the VA loan process and I get to talking about the dollar signs, sometimes my brain moves faster than my mouth, and my mouth moves way faster sometimes than my brain. So in this case, I wanted to go back, make sure I explain this again the right way, the correct way. So here we go. All right, so what I was stating was, if you had to use an FHA loan and you had to put 3.5% down on that same $600,000 house, here's what you would have to pay. Okay, so we just pull out the calculator this time, bring up the calculator correctly and do the math correctly. 600,000 times 0.035, right? That's the math, okay? 3.5%. You would actually have to bring $21,000. So I didn't put an extra zero in there when I was multiplying. And that's what I was just explaining, that if you had to put 3.5% down on the FHA loan for that same $600,000, you would have to bring $21,000 to the table. But in the case of using your VA loan for that same purchase to make up the difference in the gap of that loan, you would need $17,250. So you save yourself about $3,700. So back to the video. If it was actually a conventional loan and you was doing $600,000, well, if my mathematicians out there know that would be $30,000 that you would need. So even having the asset of $275,000, okay, let's do the math. 275 plus 600,000, you get $875,000 that you only had to put down $17,250 on. So if you want to know what the percentage of that is based on how much money you had to put down, so your 275, so 17,250 divided by 875,000 is actually 20%. It's only 2%. You only had to put down 2% of the value of controlling $875,000 worth of real estate. Now, to me, I think that is a big leverage play in your wealth building journey that you can actually have, and you can repeat the process, and we can watch and repeat this so many times that I think that this is the main thing that we wanted to start out with, is that this is secret number one that a lot of people do not take advantage of, especially if you're on active duty. Because I want you to understand, if you're on active duty, you're getting BAH, basic allowance for housing. And if you're getting basic allowance for housing and you are getting PCS, permanent change of station, that means that you're relocating on new orders, probably out of the proximity of the home that you already have. But instead of selling that home, you turn that home into a rental property and you move to your next location. VA is going to help you buy another home with your leftover entitlement. And your leftover entitlement, you can buy a home for $531,000 underneath that, and then you still have eligibility left, but you can only have 2 homes underneath you at one time. So I still think if you're moving from location to location using your VA loan, you can have a mass load of properties at the end of this where you can cash them out as a second retirement plan after your time in the military as well too. So that's secret number one. Okay, now let's get into investors. I'm talking to my investors in secret number 2. Secret number 2, yes, you can buy a multifamily property with your VA loan. That is one of the things that a lot of people have now been thinking about going forward with a multifamily property. Okay, so what is a multifamily property? It means that it's more than a single family home. That means that it's a duplex, which means that it's two houses in one. A triplex means that there's 3 houses in one, and a quadplex, which is 4 homes in one. Now, what is so great about this multifamily property that you can actually purchase with your VA loan? Well, you can technically move into one and you can rent out the other one, and that can offset your mortgage because you're renting out the other unit. Now, here's the great thing about this. If you're in a triplex, you have one, you live in one, you have 2 other rooms to rent out. If you're in a quadplex, you have 1 unit and you have 3 other units to rent out. The great thing about this is that when you're actually purchasing the property, you can actually we can actually do a rental market analysis for each unit itself. And the lender can actually take what you're living in one and what you're going to make off the rental analysis done for the market value of that other unit, what you could possibly make from the rent there, and offset that and actually qualify you for a bit more in the purchase price as well too. So you could technically own a bigger piece of property than you would have by qualifying for yourself, based on qualifying the other units as well to go along with your income that you're going to have. So I think purchasing a multifamily unit is always going to be an ideal solution for anyone. And then here's the other thing about purchasing a multifamily unit. You only have to live in it 1 year, and then you can actually move out, put another tenant in that unit, and then you can use your leftover entitlement to buy you a single family home. So secret number 1 and secret number 2 can actually go hand in hand together as well too. So don't tell nobody, just share it with all your friends who want to be in the military with a VA loan. So let's get into secret number 3. Secret number 3 is that there is no loan cap on full entitlement. What does that mean? That means that if you have 100% entitlement left over, which means that you have not bought a house with your VA loan yet, you do not have to be capped at $806,000 worth of home. So if you got a whole bunch of Bitcoin sitting around, you have a nice investment portfolio as well, and you have a nice income that's coming in as well too, you can qualify for a $1.1 million house, and you don't have to be in jumbo loan requirement. Why is that important? Look at the interest rates that we just talked about here. Right now, you can qualify as 6.30 versus 7.01. So if you're not capped on your VA loan, you can actually wind up with a better rate, and there's no loan cap entitlement. So if it's an expensive community that you live in, like let's say Beverly Hills, and you're looking to purchase a home there, then you can actually purchase that home with no risk at all, no extra incentive of risk, because based on your financial profile and the VA loan being a benefit that you have, you can get the best rate, best terms, and actually still have the full entitlement of your benefit used for that property as well too. So that's secret number 3. Secret number 4 is that VA loans don't have no prepayment penalty. Okay, why is this important to know? Because what happens if you want to make that extra one payment extra a month, a year, where you can actually make 13 payments versus 12 payments? That can knock off a lot of interest off of a mortgage. And if you do that consistently over the life of the loan, you can actually be out of that loan a little bit more, so like in half, like 15 years or so. So when you think about that type of math, sometimes there's a prepayment penalty in your documents with a mortgage if you're using a conventional or FHA loan. But with a VA loan, there is no prepayment penalty. So matter of fact, if you even refinance the home and actually refinance the whole mortgage and actually took on another mortgage for the house, the paying off that previous mortgage, there would not be a prepayment penalty for that as well too. So make sure that you check with your lender, your servicing provider who's actually servicing your mortgage, and make sure that you go back through the documents as well to make sure that you have no prepayment penalty in there if you're in an FHA or a conventional loan type and considering refinancing your loan. Okay, that's one of the things that you'll want to take into consideration. As a matter of fact, one of the other great things about your VA loan thing is entitlement as well too, is that you have an interest rate reduction loan plan as well too, that you can do an EARL, where you can actually refinance your whole mortgage without having to do anything else with documentation or anything of that sort. And it's a streamlined process as well too. So you can take advantage of that, where you can actually get your rate down even lower after you've been in the mortgage for about, don't quote me on this, but I want to say it's 210 days. It may be 180, but I think it's definitely 210. So that's another thing as well too. Okay, now secret number 5. Now, if you have a good agent and they are working with you and they're helping you work through negotiations, and you get the opportunity to say that there are some things that you needed to get done with the home, or you just wanted to offset your costs a bit to help you cover closing costs, you can always have closing cost negotiations with the seller. Now, it depends on the home that you're purchasing and what type of negotiations are going on. It could be a little bit difficult to get a closing cost assistance. Well, when we wind up getting closing cost assistance, we usually land a greater amount of closing cost assistance for the buyer. But also, you have a bigger cap on closing cost assistance against the other loan servicing providers like the FHA or conventional. With VA, you can get up to 4% closing cost assistance from the seller themselves, where they'll be willing to help you actually close the loan. And this can help you in certain ways, like paying off debt, getting out of a lease, things of that nature can help you as well. And this is one of those major benefits that a lot of people are unaware of, that sometimes that the other loan providers are actually capped at different levels. For example, conventional loan is capped at 3% from the seller. FHA is actually capped at 6%. So it just depends on which ones you're actually looking at. But VA, you can actually get that extra percent that can actually help you offset your costs in different areas across the board. So I think secret number 5 is a great tool to use if it's actually available and your agent can negotiate it for you. Assumptions is going to be our bonus tip of the day. Well, what's an assumption? Well, if you can find a home that maybe a buyer has bought with a VA loan and they are having to move based on, they may have got new orders, they may have actually decided that they wanted to get out of the service and now they're having to move and sell their home, but they have a very low interest rate versus the market, which in this case, like the pandemic, you may have certain individuals who have a 3% interest rate, a 2.5% interest rate, even a 4% interest rate, which is lower than the current market today. You can actually assume that rate. Now, the only thing is with assuming that rate is that you have to be able to actually make the seller whole. And so whatever the seller is actually asking for on the market, based on what the difference is between a mortgage payment and what they're asking for on the open market, you may have to bring that in cash. And if you have to bring that in cash, that's the only way to actually make this deal work, because the sellers want their equity out of the house and you want to assume their mortgage. So it's basically prepaying for their interest rate that you're actually wanting to hold on to, which could be a unique tool. Like maybe you can find a buyer who has only $15,000 worth of equity in the home, and they'll be willing to come off that property for $15,000. You assume their rate, and then you go and start picking up the payments where they was left off at, and the buyer moves out of the house, and now you have that home. So assumable rates are a little bit more complicated. It's going to be based on the service provider they're actually working with. There's going to be a lot more details that goes into it, but for the major part of this video, you really can understand that assuming a VA loan has its benefits as well too. So if you actually have questions about that, I encourage you to give us a call. The VA home loan is an incredible tool that a lot of individuals do not take full advantage of. If you're interested in learning more about how you can use your VA loan and what you can do with it to make yourself grow in wealth to a home ownership, definitely feel free to give me a call, shoot me a text at 757-294-8163. And if you found value in this video, I really want you to go ahead and hit that like button so we know to continue to make videos like this for you, and subscribe to the channel and ring that notification bell as well too. Like I said before, I'm your boy Craig Houston, and if you're looking to ever make a move to the Hampton Roads area, I'm ready and available to assist you, whether you're moving in 9 days or you're moving in 90 days. I look forward to catching you in the next video. Y'all stay safe. Peace.